The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Tough day of the grain markets to start the week on Monday. Much better in the cattle complex and in the hog trade. Let's talk about it. Joining us now for analysis, John Heimberg with Total Farm Marketing. John, good to have you with us again on the show this week. And oh man, what a tough start to the trade with the Sunday open, then into Monday's session in the grains and oil seeds. It just felt like weather really was a big driver, and then a lack of a big trade announcement that I think a lot of folks were waiting for from President Trump Thursday night in Iowa. It just seemed like everything kind of, coming out of the holiday weekend, it was all negative for the grain complex.
Yeah, I was pretty concerned about that little rally we had last week anyway, and was talking to producers about opportunities to build some defense and things of that nature. Typically, July rallies don't last, and they are meant to be sold. Just was not liking over the aggression of today, but that just kind of maybe tells you the mindset of the marketplace. As you mentioned, we had President Trump talking Thursday in Iowa. There were some rumors out there that he was going to announce a trade deal with the 3-day weekend and the holiday weekend. We saw some pretty good short covering going into that. Obviously, we got nothing out of that presentation by President Trump in terms of anything trade deal wise. So that was disappointing to the market, throwing continued good forecasts all the way out into the middle parts of July now, as temperatures look like they're going to stay fairly moderate. And this crop is just coming along so nicely. Crop ratings today expected to stay relatively steady, but it wouldn't be surprised if we see some trickle up on those too. My travels over the weekend, I just saw some excellent corn, and here in our area of the world, better than I've seen in quite a while, even better than last year, which was a pretty good year, obviously, up here as well. So that combination of things, plus the funds just wanting to push this down, concerns regarding supplies growing, just keeps the sellers in control of the market, unfortunately, as we put new contract low closes today on that September contract, taking out that previous mark by just a couple ticks today. So right now, it feels like the bears are back in control of the market here, and until we have something to make the buyers want to step in, that's going to probably, unfortunately, be the path of least resistance in this window, which we typically see when we have good crop years growing.
Well, John, thinking about this grain complex now, if you missed out on this last rally we saw before July 4th, and now weather really at play, the trade tariff conversation at play, it just feels like that the bears have not lost control of this grain market at all here. It just maybe they took a nap ahead of the holidays, kind of what it feels like, John.
Yeah, it really was. And it kind of turned into a little bit of a bullish trap as everybody maybe got a little excited that, hey, we got a rally going, low is in, reversals, and, all those things that kind of make you excited about being a buyer in the marketplace. But, realistically, the fundamental side hasn't changed here in that regard. I took that rally, like I said, as a selling opportunity, area to get some puts in. Did have a few guys want to get some old crop corn out just to get it out, and they took advantage of that lift, because obviously when we come back, the weather still looks friendly. Supplies continue to grow. You just mentioned it. Add in the tariff concerns that came out with President Trump's announcement today about the potential 25% tariff on Japan and South Korea by August 1st. You go look at the list of who's our buyers, and Japan's number 2 or 3 on that list. South Korea is a little bit further down, but still an active participant in the U.S. corn market. So those are things that just add a little bit more fuel on the selling fire today. So right now, again, until we see something drastically change, I think it's going to have to be on the weather front. Maybe a similar forecast like we saw last year, where the market just didn't finish out very well. The corn crop doesn't finish out. Given the supplies we got in Brazil, we got also a bump up on the Chinese crop by the Chinese attaché today. Just kind of shows us that the supply of corn, as well as other grains, continues to grow. And that's going to make this very hard for this market here, at least in this window, to find some footing.
And it's going to be interesting to watch. We're entering a key corn pollination time frame across much of the country. Some areas in the south, I mean, we're going to be harvesting here relatively soon as well. So it's all about supply and demand, it seems, in these markets. And right now, the global supply picture just looks to be, you know, pretty well off, I would say, John.
Yeah, and that's even though the front end U.S. supply. I know the export side of it's been very good. We had good export site inspections again today. We're running 30% over last year. But you just mentioned that Texas harvest is not too far away, and I've heard some chatter that some areas are going to have a pretty doggone good crop down there, and that just gets a little corn into the pipeline a little bit earlier if that harvest starts rolling. We do have USDA report on Friday. I am expecting to see some more demand adjustments, lowering that carry in. But this market's starting to calculate a yield that's probably in the 183, 84 window, if not even a little bit higher, given the crop conditions. We'll see your first yield adjustments in August in terms of USDA reports. If you remember last year, USDA raised that August yield up to 183.6 over trend line. We'll probably see a very similar type move this year. And I think that's something this market's pricing in. I've heard estimates from 2 to 5% over trend as a possibility out there. We started talking those numbers with that acreage of, the 95 million acres. That's starting to look like a really big pile of corn. There is still some concern that the demand is overstated for the new crop. We'll have to see how that plays out, because obviously if prices get cheap enough, the demand will pick up again and really maybe support that. We did see a touch of that with another small export sale announced today. But again, right now, just the path of least resistance seems to be to the downside here in both corn, beans, and wheat, especially given the time of year and the way things work on the calendar with the seasonal side.
Let's go over to the livestock sector and talk something positive here today, just with grains being a tough way to start the week. Cattle had a really strong open to the week. Feeders leading the charge there in futures. What stood out to you in the cattle complex on Monday, John?
Well, just a couple things. I mean, first off, I've been saying for a while, we've been watching that August, see if it gets into that gap that June left there. June coming off about 225, August trading around with today's close at 215. There's a little bit more air in that pocket, especially with the cash market. Now, it wasn't a bad week in the cash market, steady, maybe a touch lower. I've already heard some chatter, some prices coming at them this week that are a little bit more aggressive in terms of the cash market. So that's might be what the market's pricing in. We did have an ugly retail close on Friday, but we gained some of that back at midday today. So right now, you still got a cattle market that's working sideways to higher here, with some more potential upside, especially with that big jump in feeder prices. Again, maybe that was, we've always had that relationship between corn prices and cattle prices. Maybe that showed up a little bit today. Plus, just pure fact too that the cash feeder market is still very, very strong, and the board looks a little bit undervalued, even though the index was moving around pretty good today against that August contract. So I'm still a little bit friendly to the cattle market here, not overly friendly. I think we're at a spot where some of the buyers get a little more cautious just because of everything going on in terms of the global scheme. But at least the fundamentals are there. Cattle numbers are still tight. Lots are very current. Just talking to packers or producers, they're pulling out loads of things that are ready, but they're not aggressively selling here. And that's just something that'll help keep the cash market supported and keep this futures market supported. Over in that hog side today, though, again, watching that August contract, big, nice jump in retails today, even though the cash market looks like it's starting to roll over a little bit here with our cash index trading lower last week for the first time in 10 weeks. I think that's been some of the reason we've seen the little bit of correction in hogs off those most recent highs, especially those summer months. But maybe we're going to find a little bit of footing here, especially if those retail values confirm themselves back up a bit. And that August contract might want to get a little price recovery off that recent, since we dropped off that recent high.
And one has to wonder too, maybe some spillover from cattle to hog futures. But on top of all of that too, what amazes me is this cattle complex continues that, we get bad news or bearish news thrown at it. We're getting these phased reopenings of these ports along the southern border and et cetera, et cetera. Yet, you think that the cattle market's going to come under heavy pressure and this is it, and then find our way back. It's just at this point, I think a lot of it defies logic at times, John.
It still comes back to the fundamentals, where we are in this regard. Feeder cattle numbers are tight, even bringing some of those Mexican cattle in. Now, obviously, we have one access point open as of today. They'll open another one next week. Then we're off until August before the next openings. So it's not like we're flooding cattle into the marketplace. The market, given the tightness, will easily absorb those cattle and really not impact prices. We got the reaction off that news last week. On the one-day sell-off, and on the live cattle side too, you're still looking at just the fundamentals are there. I know we're through the 4th of July. Maybe that'll back off some of the demand a little bit here. Really, we don't have another holiday now until Labor Day. So we hit those summer doldrums with demand. But, I'll tell you, the beef trade in terms of definitely the hamburger side, there's still some good demand out there for beef, and the prices continue to reflect that. Given that tight supply picture, this market still just got some natural support in it. Now, maybe the upside's a little more limited here, since those June highs that we put in, but we'll have to kind of watch that side of it. But I think this market's still not ready to wash itself out, barring a black swan event or some type of announcement, just given those fundamentals.
John, any final thoughts for folks on the show this week?
Getting back to that grain market, pretty disappointing day today, obviously. And obviously, there's not a lot of meat on the bone, if any meat on the bone for producers here in terms of 25 sales. But there's still some room to fall. I still like some of the cheap puts. I was getting those on today for producers today. At least put a floor under this thing and get control of your unpriced bushels to some extent. We can wait later and see if this market will recover. But those are some things I was working on today for producers. Just say, if we're going down, my target was still 380 on December, maybe even softer now. We'll see how fast it gets there and what happens on the news front. That's still 40 cents from here. And some of those lower price puts here at the bottom of the scale can get you a nice little return, even with that type of a market at this time frame. So take a look at those things and control some of these bushels.
John, if folks want to reach out to you for a conversation there at Total Farm Marketing, what's the best way?
Give me a call, 800-334-9779. Shoot me an email at johnh@totalfarmmarketing.com. And don't forget that website, totalfarmmarketing.com.
Always enjoy the conversation. John Heimberg, Total Farm Marketing, thanks for joining us on Market Talk today. Have a great week, and we'll talk to you again in a couple of weeks.
Sounds good. Have a great week.
Make sure to subscribe to the Market Talk YouTube channel. You can watch our latest interviews with top market analysts in the country, find bonus content, and much more. It's easy. Just go to youtube.com/@MarketTalkAg and hit the subscribe button. Or you can search for Market Talk Ag on YouTube.